Okay, let us take a problem on fixed capital account, right? Now, as we discussed earlier, fixed capital account is a situation wherein the capital account of a partner remains fixed and all the adjustment except for fresh introduction of capital, okay, is to be done in a separate account called the partner's capital account. Right? So let's see what are the facts of this case. Good and bad are partner in a firm with a capital of 200,000 and 150,000 respectively. They agreed to share the profits and losses in the ratio of 4:3. How would the following transactions be recorded in the books of partnership assuming the capital accounts are fixed? So given that we have a fixed capital account, we'll have two accounts for each of the partner. So we will have goods capital account and we will have goods current account. Similarly, we'll have bad's capital account. You can also write this as bad's fixed capital account, and you can write this as bad's current account. Right? I'm not drawing all the particulars and date and all those columns right now, okay, because I think although it is important for you when you practice that you should prepare a full ledger account, right? So let's see. Good and bad are partner in a firm with a capital of 200,000 and 150,000 respectively. So there's a balance of capital for good, which is 200,000, and bad 150,000. So we write as by balance brought down. This is goods capital account. It's a fixed capital account. So in fixed capital account, the balance remains unchanged, 200,000. Similarly, this is bad's capital account or bad's fixed capital account, you may call it. You can also write this as goods fixed capital account. By balance brought down 150,000. We know that in a ledger, this is the debit side, this is the credit side. Similarly, this is the debit side, this is the credit side. Because capital account has a credit balance, so I have to put the balance on the credit side. Now let us see what are the transactions. Capital contributed on October 1, 2011. So there is an additional capital which has been contributed. By whom? By good and by bad, both of them. Now from a firm's perspective, please note that we are preparing these accounts from the perspective of the partnership firm. When a capital is contributed by a partner, what is the entry that you will pass? The firm will receive cash or bank. Let's say it's cash. So the cash account will be debited by the amount of money received, and it will be credited to what? It will be credited to the partner's fixed capital account. Right? As we had discussed previously also, introduction and withdrawal of capital has to be adjusted in the fixed capital account. So you write down by cash 80,000. Similarly, you've got cash for bad also. So you will write by cash 60,000. So when this goods capital account is what? It's credited. So I passed an entry on the credit side by cash. Right? Now the other entry is interest on capital, 6% per annum. Right? Now to calculate the amount of interest, okay, let me take you to a different sheet. So what's the capital which we have? We have 200,000 which was standing as an opening balance. So we assume that this opening balance, assuming it's a March year end, because that's what you typically follow in India. So this balance would have stood for the entire year right? So on 200,000 you will pay 6% per annum interest, but this 80,000, if you notice, came only on October 1, which means this money was used only for 6 months, right? So when you calculate the interest on capital, let me just remove this particular piece from here. Okay, so you have 200,000 for good which was standing from day 1, on which you have to pay interest for 12 months at the rate of 6%, and you have 80,000 for good on which you have to pay interest for 6 months at 6% per annum. So how do you calculate interest? Simple interest, principal into rate into time, right? So for 200,000 the rate is 6%, so you divide 6 by 100 into time. It's for 12 months, so you can write it as 1 year, right? This time has to be in years. This goes off with these two. Okay, so it comes to 12,000. On 80,000, which is the principal in the second case for the fresh capital, the time is 6 months. So it's 6%, so you again divided by 6 by 100. 6 months can also be written as what? 6 upon 12 years, because there are 12 months in a year, or 1 upon 2 years into 1 upon 2. You knock off these two, 2 goes into 6 3 times, 3 into 800 is 2,400. So the total interest will be what? 12,000 plus 2,400, or 14,400. Right? So bad got interest of 14,400. So we pass an entry, but where do we pass an entry? Because this is a fixed capital account, so we pass an entry in the current account. So by interest on capital, 14,400. Likewise, you will also have an entry in bad's current account by interest on capital. Now how much will be this? Well, I am leaving it to you. Please find it out. The answer to this should be 1,50,000 into 6% per annum, which is 9,000, plus 60,000 into 6% per annum for 6 months, which will be 1,800. So the total interest should be 10,800. I've calculated this quickly. You can try it easily at your end following the procedure that I told you for the other case. Following this was for good. You can calculate it for bad as well. Then there are drawings of 10,000 and 10,000 in both the cases. So when you do the drawings, what are the entries? When you do a drawing, the capital account gets reduced. Capital account has a credit balance, so to reduce this you have to pass a debit entry. But the thing is that because these capital accounts are fixed, so you write two drawings in the current account. 10,000. Two drawings. 10,000. So we've done this entry. Then there's interest on drawings. Now interest on drawings again is going to do what? It is paid by the partner to the firm. So therefore it reduces your capital. So that is also a debit entry. Interest on drawings 600. Interest on drawings 600. I know this is a smaller page kind of, but we'll kind of take care of this in the next video which you do. Salary 15,000 for bad. Salary is an income, right? From the perspective of the partner. So for an income, ideally his account, the balance should be increased. So what's the entry that a firm makes? The firm makes an entry, salary account debit to the partner. So the partner's account is credited. Because this is a fixed capital, so we pass it in the credit side of the current account. By salary. How much? 15,000. There's a commission of 8,000, so we write by commission 8,000. And there's a share of profit of 24,000 and 18,000 for both of them. Again, profit is also what? That increases the credit balance of partner's capital account. But because it's a fixed capital account, so the entry has to go in the current account. By profit share 24,000. Profit. Right? And with this we come to an end of this exercise. The idea was to show you that the partner's capital account will remain fixed, right? All the entries except for the introduction of capital went to the current account, right? Now you can just do the totaling of these accounts. Let me just quickly do this for you. So if I look at it, 200,000 plus 80,000 will be 280,000. This has to be balanced, so you put in 280,000 here also. There's nothing here, so we write 280,000 as balance carried forward. Similarly, 150 plus 60, 210,000. 210,000 balance carried forward. 210,000. Here 14,000 plus 24, 38,400. Same number you write here also. If you subtract this is how much? 10,000 plus 600, 10,600. If you subtract this from here, you will get 27,800 to balance carried forward. Here also the debit side is less, so on the credit side you have 15 plus 8, 23 plus 18, 41, 51,800. Subtract 10,600 from 51,800, you will get 40,200. Balance carried forward. Right? And that's how you prepare the fixed capital account. Had it been that this was a fluctuating capital, then the only thing which would have been relevant is that you would prepare only this capital account. And there will be no use of the word fixed over here. All these entries which we have right now made in the current account will go and sit in the capital account. Right? We hope you would have liked this video. If not, please send your comments. If you like this, please hit the like button at the bottom, and you can also share it with your friends and everyone and help us create an educated world. We are providing these lectures free of cost, and that's about it. Thank you very much for your time.